Welcome to JMMB's year-end performance financial results investor briefing. We are so very excited. Of course, if you haven't been keeping tuned to what's been happening locally here in Jamaica and certainly Trinidad and Tobago, because we released our results in both of those markets, obviously as part of our obligation. It has been a wonderful 2022 financial year, and we're so very excited about the results that we've shared so far with you. Of course, it was a record-breaking year of profitability for JMMB Group, the highest level of profits that we've ever experienced, ever produced, and we're so very excited. Of course, I'm excited, but I don't have all the details. I'm just really giving the introduction. Of course, I'm Carrie-Ann Stimpson. I'm the Group Chief Marketing Officer of JMMB, and my honor here this afternoon, as always, is to just moderate and take us through today's briefing. Not only, of course, do we have the presentations as we typically do, but of course, towards the end, we will open up the floor to invite questions from you, our viewing audience. So thank you very much. Of course, we are recording this session as it is happening. So some of you are live with us. Thank you for joining us live. But we are also recording it, and we're going to be uploading the recording, as we always do, on our YouTube channel. So whether you're catching us live or on the replay, we're happy that you've taken the time to be with us here this afternoon. So without further ado, we're going to get started. We're going to again start off with our main presentation, kicked off by our able CFO, who I'm going to introduce in a minute. Oh, sorry. Keith is going to go first. See, I'm too excited. You see, when you get fantastic results, that's what happens. You get excited. So Keith is going to kick us off. That's our group's Chief Executive Officer, CEO, Keith Duncan, of course, who we know and love. He's going to be kicking us off, and then we'll continue the presentation with our other presenters, complete the presentation, and then open up for questions. So without further ado, for sure this time, I'm going to hand over to Keith Duncan, our group CEO, our beloved CEO. Sir Keith, welcome. Over to you.
Thank you, Carrie-Ann, and thank you, everyone. Good afternoon to all the members of the media, the analyst community, and the JMMB Group team online. Thank you very much for joining us today. We're pleased to be here to share with you our results for the financial year 2021-2022. We are making a real effort to ensure that we keep our investors totally abreast of developments within JMMB, within the context of the global environment, the local environment, the regional environment, the domestic environment, and how we choose and strategically and tactically navigate the environment that we see going forward. And so we think we need to be able to give direction to investors and have them have a good appreciation of where we are as a group of companies. So thank you all again for joining us. I would like to jump right into it. JMMB has, we have a very clear strategy that we have outlined time and time again in terms of our diversification. Diversification is very important to us across segments, across business lines, and across geographies. This works very well for us because, as we can see, when we look at the numbers, which Patrick will get into, we see from across the region that we have, been getting greater and greater diversity of earnings coming from out of Trinidad, coming out of the Dominican Republic, coming out of Jamaica, and also coming out of our strategic investment in Sagicor Finance Corporation, which has paid rich dividends for us, and which we made in 2019. Important to us is our client segments, and we have been working really deep in our relationship with our client segments and expanding the breadth of our client segments. Over in the last 2 to 3 years, we have made a real, I would say 3 to 4 years, made a significant investment in the small and medium enterprises, and it has paid paid off very well for us, handsomely for us in the area in DR, especially Jamaica. We're beginning to make some serious inroads into the SME segment. This is nurturing that SME segment, which we believe is going to be able to produce real positive results for us. And for the client themselves, because of our approach in terms of guiding this SME segment, nurturing this SME segment, knowing that they are the key to growth, and this SME segment can grow, as we say, from small to medium to large enterprises. And JMMB does have the gamut of services across the business lines, from banking, investments, equities, private equity, to really support and facilitate the growth of this SME segment. So it has really done well for us. Our client base has grown significantly. It's close to 30,000 new clients over the year, moving our client base in excess of 400,000 across the group. We are continuing to grow, not only in terms of our numbers, in terms of assets under management, but in terms of our clients. And that is very important to us. And we continue to maintain healthy, positive relationships with our clients. We have been through a very rough period with COVID, and it was especially our clients that were impacted in the slowdown of the economy through lockdowns, etc. And we remain very close to our clients in that period, and that worked out well for us in terms of the growth of our client base. We've also been adding new services to our client base. We just in Jamaica added our JMMB ePay Meals card, which serves around 81 companies, issuing over 12,000 cards to their employees, and giving access to about 100 merchants. So that is really a milestone partnership that we have developed with Norbook Transaction Services, and we're going to look to build on that going forward as in terms of our alternate payment strategy. Across the business lines, we continue to grow significantly. Banking, where we continue to outpace the rate of growth of the market across Jamaica and the Dominican Republic. In Trinidad, the market had a very rough year in Trinidad last year, where the banking sector barely grew, and JMMB's growth was in line or just marginally below the growth. But Jamaica, JMMB Trinidad, our bank in Trinidad, took the opportunity to really get its portfolio streamlined, get its business processes, and get its risk management, credit processes streamlined, and putting new leadership in place in Trinidad and Tobago. And we're very pleased with the results coming out of Trinidad for the year, coming out of our investments business line, our banking business line, and our consumer finance business line, JMMB Express Finance, which is doing extremely well. This is a business line that's only been in place for the last 3 to 4 years, and it has broken into profitability and continues to grow very significantly year over year. In the Dominican Republic, we're able to launch, as part of our off-balance sheet strategy, our Sustainable Energy Fund in the mutual fund, our SAFI. SAFI is our mutual fund operation. And this fund has done quite well, and it is in keeping with JMMB's ESG policy. As we go forward, we are also seeing in Jamaica, where our remittances business line has, over the last 4 to 5 years, become a significant contributor to JMMB's income stream. I would like to acknowledge Sharon Gibson, who is the head of our remittance team of a money transfer company. That company has done extremely well for us over the last 4 to 5 years, and continues to outpace the growth of the market. So look, that is a company that you guys need to continue to look out for as it becomes, as we look to standardize its operations and expand its operations. As we said, the geographic diversification is working well for us. When we look at the markets, the Dominican Republic continues to do very well, in that the DR was able to contribute about 23% of our net income. And at this Sagicor Finance Corporation was able to significantly contribute to our bottom line year over year. So we did make a very good investment in that group. And there are so many possibilities that exist with that SFC acquisition. Our shareholding remains at around increased by about 23% due to buybacks. So, we are very happy with that with the Sagicor investment. Trinidad continues to rebound and coming out of a very difficult year where the COVID restrictions were in for a much longer period of time in Trinidad than it was in for DR and Jamaica. So we are now seeing some rebound in Trinidad as a result. And secondly, that in Trinidad, what we're seeing is the Trinidad being an energy-based country through primarily gas and to some extent oil, where we have really positive hopes for Trinidad as we go forward. And therefore, on that note, I would like to introduce to you, we did highlight at our last investor brief that we had brought on a new CEO for JMMB Bank Trinidad, Mr. Sean Moses. And Mr. Sean Moses has hit the ground running in Trinidad and with an excellent team. And he will speak on behalf and give a country overview of Trinidad and what our expectations are. And then, because we have the three business lines in Trinidad, banking, JMMB Bank, JMMB Investments, and our consumer finance business. So over to you, Sean, and welcome, Sean, and thanks for joining.
Thank you, Keith. Really appreciate the invitation. And I appreciate the warm welcome. I'm very happy, very, very, very happy to now be part of the JMMB family. For a little background on me, before I joined JMMB, I spent about 18 years at two other FIs with exposure in both the TT space and the EC markets. So coming into the JMMB TT, I was eager to understand the organization and more importantly, the culture. And I can honestly say that I'm very pleased with all that I have seen thus far. And I am extremely delighted to be here to share a few words around the performance of the territory during our last fiscal. Our performance during our last fiscal saw a 400% increase in net profit after tax, moving roughly from US $1 million for the year to US $5 million. And this performance was driven by all entities exceeding their budgets. Keith would have mentioned, special mention must be given to our consumer finance business line, which actually reported 208% increase in profit compared to the prior year. Our investment business also did really well. And it's important to note that this performance was still accomplished with in the backdrop of lockdowns existing in TT. So that is amazing work. As we look forward, one of the effects of the unfortunate Russia-Ukraine war has been the increase in the global prices for oil and gas. These higher prices, this event has resulted in some higher prices in the global market, and this has resulted in additional revenues in the TT space for oil and gas reserves. The Minister of Finance actually reported a mid-year budget surplus of 654 million compared to the original projection of a deficit of 4.5 million. So actually for the 6 months of this year for the government was pretty strong. Additionally, thankfully, our central bank has not seen the need to implement any contractionary monetary policies as we have seen in the Jamaica and DR markets. So we remain very positive for the outlook of the territory. I mean, COVID restrictions have been lifted. All industries have been reopened. We are seeing various private sector projects moving forward. And the government is also expected to commence some projects as we are seeing RFPs coming out to the market for financing. We are seeing the government trying to settle outstanding VAT refunds, etc. So there will be some additional liquidity coming into the business sector space. However, as concerns globally exist, we are also mindful of the inflationary pressures in the environment. Notwithstanding, we are extremely confident that given the present economic climate, the market landscape in TT, this will foster a very strong year for the TT team. And we expect growth in all business lines. In particular, Our consumer finance space, again, we expect to do great things. SME, we expect to see great movements in that space as well. And our investment business line as well, we expect to see some further growth. So please look at this space. We expect a significantly strong performance from the TT team in this financial year. So Keith, over to you again.
Thank you, Sean. And we have Mr. Our CEOs in Trinidad are Sean from the bank, Trisha from JMMB Investment, Trisha Gopal Singh, and Elson James from the consumer finance, and they have been working quite well to get Trinidad moving on in the right direction. And this underlies again diversification, showing that in an environment where Jamaica could be and BR could be impacted by rising commodity prices, oil prices, etc., that there are benefits to having investments in Trinidad and Tobago because of the diversification of their resources, their natural resources, etc. So therefore, while we see a rebound in Jamaica and the BR through tourism, which we are seeing quite a rebound, we are also going to see that rebound in Trinidad and Tobago. In terms of the oil and gas, which is a critical driver for their economy. And this, and as I said, it's important. But as we go forward, we have to really manage. We have made the investments in our IT platform, in our operations, in our staff costs. We have made the investments to really provide a platform for growth for Jamaica, for the group. I apologize, but for all three countries, we have standardized our banking platform across all three countries. So when we roll out products and services, we can roll out in all three countries at any one point in time. And we will continue to make investments in our infrastructure. We continue to make investments in people because JMMB is in here for the long haul for growth. And therefore, sometimes when we see our numbers and we see our growth and our efficiency numbers, one needs to look carefully to understand that these investments are being made for the long-term future growth of the JMMB Group. So on that note, I will, hand over to Carrie-Ann, again, our moderator. Carrie-Ann, thank you.
Yes, Sir Keith, thank you so much. And I'd also like to add my own welcome to Sean. Sean and I have been doing quite a bit of work together. And just to again acknowledge, as you said, Keith, acknowledge the entire leadership team and the broader team in Trinidad and Tobago, JMMB. And just to acknowledge again the CEOs of our subsidiaries there. You have Sean Moses, head of the bank, Trisha Kisoon, JMMB Investments, and Elson James of JMMB Express Finance. Wonderful team. I miss them. COVID has separated us, so hopefully we'll get to see them soon. But thank you so much.
Carrie-Ann.
Yes, sir.
Carrie-Ann, do you think Trisha will forgive me?
I think she certainly will. We have nothing but love for you, right, Keith? We have nothing but love, and we know we have a lot juggling, so it's all good. It's all love. Thank you so much, everybody. So I'm going to hand over now for sure this time to our Group Chief Financial Officer, CFO, none other than Mr. Patrick Ellis, who is here with me in studio, who will continue the presentation here today.
All right. Thank you, Kerry. And good afternoon to all our stakeholders. My simple task is to present to you our financial results for the financial year March 22. And I'm delighted to tell you that they are good results. We have recently released our audited numbers. And for the financial year March 2022, the JMMB Group reported net profits of $12 billion. It's the largest earnings that the group has posted in its history. Our group CEO just highlighted. It represents a 56% growth year over year. The previous year was $7.7 billion. And now we're at $12 billion and represent a 56% growth year over year. Importantly, what I like to highlight is what is driving that growth. And as Keith just mentioned, it's a focus on our executing a planned strategy. We see our operating profit at 8.3 billion or 3% growth. And when you look at the core of our income statement, it's a focus on our core operations. So as part of our strategy, we focus on growing that core in our operating revenue at $26.6 billion, a $4 billion, $4.2 billion or 19% growth. And all our core business lines, business activities saw a positive year-over-year movement. Net interest income growing to $11.6 billion or 11% growth. That's a function of your banking business line, your loans portfolio, your investment portfolio stemming from your investment business lines. Gains on securities trading, 8% growth in an environment that was favorable in the first half of the financial year. However, to the second part of the financial year, we would have seen some increase in interest rates. So overall, in terms of our revenue lines, our revenues from our managed funds, this is our off-balance sheet products managed by our fund managers, would have seen $2 billion at the end of the financial year, a 36% growth. Our Cambio activities, our FX activities, mainly driven by volume and expansion as our regional diversification, showing $2.6 billion or 34% growth. And also an exciting era for us, our capital market business line continued to show a positive trajectory. We had earnings overall of $2.9 billion or 73% growth. So in terms of our revenue stream on the core activities, what we saw from the JMMB Group was growth in all of our core business area, and it resulted in a $26.6 billion or 19% growth overall in revenue. Now on our expenditure line, you would have seen some level of growth in our expenditure. And I think Keith did an excellent task of setting the stage in terms of what is happening behind the numbers. And when you look at our expenses, you have to look at it in context, in that what we are doing is actually building out our long-term strategies while managing our short-term efficiencies. So while we are still in a pandemic, we have to position the group for long-term strategic growth. So you would have seen an investment in our banking platform. We would have standardized our banking platform throughout the group. So we would have implemented a standardization of that platform in Jamaica, Trinidad, and the Dominican Republic, which we would have implemented. We would also have implemented one reporting platform, and that's the implementation of our Oracle platform that facilitates a group and more efficient reporting up to the group. Also arising from prior year, coming out of a COVID-19, where we would have tightened up in terms of efficiencies, we would have granted an inflationary increase in terms of staff and building that capacity for that long-term strategic goal, and hence you would have seen that increase in salary. However, in context, if you were to normalize our expense numbers year over year, factoring those one-off and that investment that we would have made for the long-term efficiency of the business, our expenses normalized you have seen year-over-year growth of around 15%, and therefore our efficiency ratio overall would have reduced, I would say, while it's at 69% and still a very strong number. If you look at the overall efficiency ratio for the group, we have been bordering around 70, but despite our investment in long term, we are still at 69. And I'm saying if you were to normalize that, I would say we'd be around 65. So the group is still on a very strong platform while investing for the future, we're still able to maintain a strong efficiency ratio. Very importantly to our stakeholders, we spoke to our regional diversification. And it forms a very important part of our strategy. If you look at the diversification in terms of our earnings, we would see our Sagicor contributing 42% or 5.1 billion in terms of towards our net earnings. And this is an investment that we would have, a significant investment of 250 million US that we would have made, and we are now reaping the rewards of that. We see where, from a Jamaica perspective, it contributed 28% or 3.4 billion in earnings. The Dominican Republic contributing 23% or 2.8 billion. And we just heard Sean speaking to Trinidad rebounding from the COVID pandemic, and in terms of the reopening of the economy, contributing 7% and 800 million in earnings. So it shows a diversification within the JMMB Group, diversification of earnings, and also diversification from a business line. From an operating profit standpoint, and this would exclude the earnings from Sagicor, you would have seen that in our audited numbers, we would have highlighted a net operating profit of 8.3 billion. Jamaica would have accounted for 48% of that, or 3.96 billion. Dominican Republic 2.9 or 35% in terms of those profits, and Trinidad 17% or 1.4 billion. So overall, in DR, we had very strong earnings coming out of the DR, taking advantage of favorable market opportunities, and Trinidad rebounding, as I mentioned, and Jamaica continues being the flagship, continues to produce very strong results. So overall, from a composition of earnings for the group, it shows that we are on very strong footing. Sagicor, SFC, Sagicor Financial Company Limited, our initial stake was 22.5%. Through various share buyback by the group, our stake has increased to 23.29%, and we are very happy about that. Balance sheet value at the year end of 42.8 billion. Record share of earnings from SFC of 5 billion. And we also received dividends of 1.1 billion. And also there was a post-audit dividends distribution also that was received post year end as well. So this investment continued to realize great returns for the group. We're very excited about it. It adds to that regional diversification and that business line diversification that we have been stressing. And just to highlight and to focus and just to emphasize the point, in terms of, we just saw the look in terms of a regional diversification, now looking at our business line. Our banking business line continues to be, it's an area of focus for us. Our loans, Keith mentioned the SMEs. We continue to see the banking business line growing faster than market. We had a 29% growth for the financial year, outpacing market. On the financial services side, this represents our investment arm, our off-balance sheet, and our funds growing by 12%. So in both cases, we're seeing strong growth. Our banking business line showing revenues of 11.2 billion, and financial services 15.1, amounting to 26.6 billion. So overall, we are very pleased and we are very happy, not just because we are growing, but where we are growing. Just showing a look now in terms of the composition of our balance sheet and the quality of assets that we have on balance sheet. I mentioned earlier that the banking business line is very important for us. Our total assets has a 20% growth. We're 614 billion at the end of the financial year, mainly driven by our core activities. Loans showing a 23.2 billion growth, or 19%, was 142 billion, 42.7 billion at the end of the year. Our investment portfolio, 332 billion, or 27% growth. And this was mainly funded by our customer deposits, showing an 80% growth, 151 billion, and our repos of 298 billion. So once again, fellow stakeholders, it shows that in terms of the growth on our balance sheet, we're growing in our core areas and showing all positive trends. The funds under management represents our funding, and what that tells you is how are we funding that growth on our balance sheet. I just indicated earlier, part of that growth was funded by our deposits of 151 billion, our repos of 298 billion, and our due to other financial institutions. We would have mentioned earlier in our presentation in December, where we would have drawn down an IDB funding of about 5 billion, and that we mainly use to fund our SME portfolio on our banking side. So JMMB continues to execute on our strategy. We continue to focus on our core activities, and the overall results of that is that you have a strong balance sheet, you have strong earnings, and also strong returns from a market perspective, which is ahead of market. From a capital perspective, and that is our capital is the pillar on which we stand. At the end of the financial year, you would have seen capital of 56.4 billion. And the point I'd like to emphasize here, the capital, when you look at all the regulated entities within the JMMB Group, are adequately capitalized. And our strong capital base was bolstered by our profitability. And you would have also seen that we would have made various dividend distribution of approximately 1.67 billion during the financial year of about 85 cents, and subsequent to the financial year we would have paid out another 25 cents, or 490 million, to be effective in June. So while we continue to earn, we continue to distribute, and we continue to maintain a very strong capital base within the group, and that is the pillar in which we execute on our strategic initiatives. That, in a nutshell, is a summary. I know a number of us may have questions, and we will take those questions. But at this time, I'll hand back over to Kerry, and I think he may just take us through and just give us a summary and wrap up.
Thank you, Patrick. And you are correct that Keith will just wrap up and give us a summary before we officially open the floor, as it were, for questions. Just a quick housekeeping item. If you have a question, there is a button, the Q&A icon button down at the bottom of your screen. You should be seeing it there. That's where we invite you to type your questions, submit them, and we'll work from that master list of questions, acknowledging David Rose, who is already well out the gate with a number of questions. We'll try to get to as many questions as possible, especially ensuring that everyone who has submitted a question gets at least one of their questions answered if they ask more than once. So that's fine. So we'll get through as many as we can. And as always, if time runs against us, then what we'll do is we'll take all the questions and be sure to respond to each of them directly to you offline at the end of the broadcast here. So please go ahead and submit your questions at this time, and then I'll hand it over now to our CEO, or Group CEO, Keith Duncan, to do a final summary, and then we'll come back here for questions. Sir Keith, back over to you. Thank you.
Thank you, Carrie Ann. And, JMMB and the globe was so looking forward to transitioning out of the COVID environment, and we were all looking for full recovery of the economy, and we are on path. I mean, in Jamaica and the DR for returning to pre-COVID levels, like maybe the DOMREP has gotten there already. Jamaica is right there on the heels of the Dominican Republic in terms of a recovery. However, as we were emerging and we saw some normalization and a new normal while as we learned to live with COVID, we then had the Russia-Ukraine situation emerge, which has all now through a different spin onto the global markets in terms of moving commodity prices, moving oil prices, energy prices, gas prices, commodity in terms of wheat, corn, all of these areas that really impact food prices, etc. So what we have seen is that we have moved into a inflationary environment, and coming out of COVID, where we did see the disruptions in the supply chain and we did see some inflation, we thought that would be transitionary. But what we have seen now is that with the geopolitical tensions, the Russia-Ukraine situation, the supply chain disruptions, what we have seen is and the inflation environment continued to, an inflationary outlook being fairly significant globally, locally, and we see the central banks doing their best to find the balance between containing inflation and ensuring that there is some growth in the economy, and that the interest rates and the monetary policies does not move globally and locally countries into recession. However, this is just another environment that we as JMMB Group will have to navigate and work through. We were able to do so with COVID when we saw the impact, which was really on the domestic economy, locally, tourism, lockdowns, slowdown in total slowdown in the economy, where the economy contracted by close to 11%. Now we're now facing another set of challenges, which we are absolutely prepared for. As we go forward, we expect that what will happen, the high interest rates will be a feature for us over the next year or so. We do expect, and as analysts and the different multilaterals, the World Bank, IMF, etc., and even the central banks in the region, they do expect that inflation will probably peak out in the middle of this year toward over the next 3 to 6 months, and then we could see inflation start to subside somewhat. And then you could see a different signal coming from the central banks in terms of the relaxing of the tightening of the monetary policies. You could see some relaxing or some ease up on the monetary tightness that has been implemented over the last 6 months or so. So we're also hoping, and I think the whole globe is hoping, that the Russia-Ukraine tensions, the geopolitical tensions that exist in Europe and globally will ease towards the end of the year. And then we could see some normalcy going into the next calendar year, 23, and things starting to settle down as a global economy and how it impacts us locally. We, however, will continue to stay close to our clients, because we do expect that there will be an impact on the business as interest rates go up. And we have to stay close to our SMEs, who are more vulnerable than even the corporates. We have to stay close to our retail clients as we see interest rates move up, because interest rates have moved up and the cost of funds has moved quite significantly in Jamaica and the DR, and therefore there wouldn't have to be some kind of reflection. Now, nobody wants to pass on this as to the consumer and our clients, and we're going to be very careful how we do so. But there will have to be, where we do pass that, where the cost of funds that we are now facing, which is significantly higher than a few months ago, that will have to be reflected in the interest rate pass-through. But we are going to be very careful and very deliberate around how we manage that with our clients. And as we go forward, we will continue to see some disruption in the financial markets, because as you move interest rates up, then you will have the impact on the financial markets, on spreads, on net interest income, on the pricing of financial assets. Those are all consequences of a tightening monetary policy and a rising interest rate environment. However, we are prepared, as we normally are, to face this, and that we will see. The diversification helps us, because we do expect stronger results out of Trinidad and Tobago, as Sean pointed to earlier. We do expect that we will continue to grow in our banking business line and our investments business lines. We will continue to grow in those areas. We continue to build out new products. Our point of sale is finally will be implemented, that point of sale solution, which is so important to especially our SME client base and our corporate client base. We have specific products that will be embedding investment management or corporate payment solutions, products like this that we're going to embed. We're going to be diversifying and pushing in revenue streams that are related to non-capital absorbing lines. So we're really going to be pushing hard and really looking to adjust our strategies for this environment. And we are well down the road in doing so. We're going to continue to work on the digital experience and the digital solution, because within a couple of years, or in the very short term, I would say within 2 years, we would want to have a totally digital experience for our clients. Right now, I would say, a top of the class digital experience with our Moneyline platform, and we know all what the features come with that Moneyline platform. But we're going to continue to have a total digital onboarding experience. We should be making so more efficient for the client to do business with JMMB and to begin the business relationship with JMMB. And we're also looking forward to our long-awaited mobile app, which is currently in testing. As I said, we're going to continue to look at inorganic growth, where we will be looking, we always have in our pipeline opportunities that we continue to evaluate for acquisition. And we do have a significant pipeline, and we continue to work that through. We're very deliberate about it. We're focused around it. We don't wait on the opportunities to come. We're constantly surveying the market, looking for opportunities, and we continue to focus around our region and Central America in terms of opportunities. So we are confident that despite what is going to be another challenging environment, one which is a little different from the COVID environment where we had the lockdowns, but now we're now facing higher interest rates, tighter monetary policy, and we believe that we are positioned to navigate this environment very favorably and successfully. And as we say, the JMMB Group is a very agile group, and we are able to make those tactical adjustments to ensure that we can continue to deliver returns to our shareholders. On that note, again, I thank everyone for participating and joining us today. And as we demonstrate JMMB's ability to continue to grow and ensure that we deliver a par excellence client service while delivering returns to our shareholders. Thank you very much.
Thank you very much again, Sir Keith. We're so very happy to be sharing all of this great information with you surrounding what was really a wonderful, wonderful year of performance. And we're grateful for the opportunity to share with you and also to now take some questions. Again, we have a number of questions, but we wanted to make sure that we get as many questions in as possible, and that everyone who asks a question would get at least one of their questions answered. So we're going to get to as many of them as possible. And if we can't get to all of them, we're good for it. We're going to make sure that we connect with you offline after this broadcast to get the answers that you need. Thank you very much. So I'm going to start off with a question here from our friend David Rose, who never misses a briefing. Hi, David. Thank you so much for joining. And this specific question, we're going to invite Carolyn DaCosta. Carolyn is our head of legal and compliance for the group. And David's question is, you formed JMMB Financial Holdings Limited the day before Christmas. Your audited notes that all of your regulated subsidiaries will be moved to that subsidiary. However, you did a reorganization in 2015 driven by the omnibus regulation with JMMB Bank Jamaica held under JMMB Group Limited. You even injected $2.7 billion into Jamaica Money Market Brokers Limited during the year, says David. Thus, why is the Banking Services Act forcing another reorganization now for JMMB Group? And what associated expense or timeline is related to this reorganization? Carolyn, over to you to give a response to David's question. Thank you very much.
Hi, good afternoon, everyone. So David and participants who are 2015 was not a reorganization. What we executed in 2015 was a scheme of arrangement as mandated by the Bank of Jamaica because we had acquired the Capital and Credit Financial Group. And the regulation speaks to a security dealer could not own a deposit-taking entity. So in 2015, what we did was that we transferred the ownership of the entities from the original parent, Jamaica Money Market Brokers Limited, to now the ultimate parent, JMMB Group Limited. And we did that by the listing and delisting of the shares on the Jamaica, Trinidad and Tobago Stock Exchange. What we are now doing is a continuation in that the Banking Services Act, Section 7 and 69, I believe, requires that a financial group that has a deposit-taking entity within the group must have consolidated supervision, and it must have a financial holding company that has the ownership of all the financial entities. So what we're doing now, we are separating the regulated entities from the non-regulated entities. So the non-regulated entities will be owned by JMMB Group Limited, and that is JMMB Real Estate, and Capital and Credit Securities Limited. Even though securities in the name, it is not a operating company. It is a special purpose vehicle. And JMMB Financial Holding Company is now going to be regulated by the Bank of Jamaica as a financial holding company, owning all the regulated entities in the group. The cost is being managed, and the team who is working on this project, we are ensuring that we take the most cost and tax efficient way of transferring ownerships. So I hope that clarifies for you, David.
Thank you so much, Carolyn. And again, yes, this is being recorded, so if anyone missed any of the responses, you can go back and catch that.
And just to add, Kerry, what we are doing, just to add to what Carolyn is, what we are doing is not just specific to the JMMB Group. It applies to all financial institutions, deposit-taking institutions within the country.
Okay, that's a great added point there. So thank you very much, Carolyn. And we'll move on now. I'm going to take a question from Stephen Jackson. Hi, Stephen. Thank you so much for joining. So Stephen's question, and I'm going to ask him to stand by. I'm going to invite Damian Brown, who is our Group Chief Investment Officer, to respond. And Stephen's question is, JMMB Group's capital stands at $56 billion or 9.1% of total assets. In a volatile market where asset valuations can move by double-digit levels fairly rapidly, is JMMB planning to raise its capital towards a double-digit level? Asked Stephen. Damian, over to you, please.
Thank you. Our investment and risk management framework ensures we maintain a risk profile and sufficient capital to manage through various scenarios. And this has allowed us to navigate appropriately through different market conditions. With respect to raising capital, growth opportunities, to what Keith would have spoken to, are more likely to drive any action for capital raising. As Keith spoke to, there are a number of attractive opportunities, and we think that more will arise during these market conditions, and then we would see how we would position ourselves to take advantage of them.
Thank you very much, Damien. And thanks for your question, Stephen. Now, I'm going to jump to a question from Al Edwards. Hi, Al. Thank you so much again for joining us. And Al's question is that some of your competitors in Jamaica have announced that they will be raising their rates in line with the tightening of monetary policy by the Bank of Jamaica. JMMB has not indicated it will be doing likewise. Can you explain? And I'm going to invite Moya Liba Barnes, who is our General Manager in charge of Retail Client Partnerships with JMMB Bank, to respond to this question. Hi, Moya. Thank you. Over to you.
Good afternoon, everyone. Thank you for that question, Al. It certainly is on everybody's mind. Interest rate hike these days, it's the question that everybody wants to know what's happening, with the increase in the Bank of Jamaica policy interest rate over the past several months. JMMB Bank will in fact be increasing the interest rate charged on our variable interest rate loans. And this will be no more than 1.5%. And it will become effective August 1st, 2022, because we're committed to giving our clients some notice, a minimum of at least 45 days. So, we recognize as well that these are challenging times, and there are some clients who may have, issues in meeting the monthly payments with these increases. And what we're doing is we're inviting our clients, to contact their JMMB Bank representative so we can have a conversation to explore options if a client is really, really having a problem or is struggling with the increase that might be applied to his loan.
Thank you so much, Moya, for that clarifying response. I want to now take us back to another question from David Rose, and we're going to travel a bit across the waters to get a response regarding this question, because it's specifically about our Dominican Republic arm. Your Dominican Republic subsidiary, or certainly our arm of operations, performed extremely well. Can the country head of the DR, that's Juan Mello, who is standing by, can the country head speak to that performance and any plans going forward for the business, especially with the launch of the new environmental fund and JMMB Bank DR getting a BBB rating? And we're going to welcome now Juan Mello, who is the country head of JMMB DR, to give a response to that question. Welcome, Juan. Hola, bienvenido.
Sure. Thank you for the question. Yes, indeed, we had a great year last year. We are happy and I'm very proud about it. And basically, our performance was guided by our capabilities on the trading side. We were able to take advantage of the market conditions in terms of very low rates because of the central bank pushing for economic growth after the pandemic and promoting the recovery of the economy. And also, as you have mentioned, our funds management company was able to launch our environmental sustainable energy fund, which is a $60 million fund targeting especially renewable energy sources like sun and wind. In that fund, it's already funded with $20 million. We expect that progress to continue. And as you said, our banking arm in the R got upgraded on its credit rating. We have shown continuous growth in terms of our credit portfolio and profits. And as we move forward for this year, We have very clear plans to expand our branches and implement electronic channels for our clients. So we are very optimistic and very happy about the development of our banking arm in DR. There is a very good acceptance from the clients in terms of our integrated financial solutions offering. And we expect, as we move forward through this economic crisis, to continue to show a strong performance in our banking arm and our investments arms. Thank you.
Thank you very much, Juan. Much appreciated. And we hope you and your entire team in the DR are well and will continue to be well. So we're going to now head to another question from Al Edwards, and I would say this is a kind of, I would call it a super question, because we had a similar connected question being asked by David Rose, and it really speaks to, or I guess, our expansion strategy, as I like to coin it. So Al's question is asking, JMMB, he says, JMMB has done well with its Caribbean footprint, of course. Will it consider establishing a presence in the diaspora, rather like the likes of Jamaica National has done in the United Kingdom, for example? And I'm going to ask Claudine to take that question, because it actually rings similar. See, I have laptop and phone here juggling people. It kind of rings similar to a question that David has asked, and we're going to get there too, because David asked a similar question, a slight extension that says, the two proposed acquisitions did not materialize during the financial year that just ended. What's the current situation there, as well as expansion outside of Jamaica as part of your diversification plan? So the two questions are kind of connected. So we're going to hand over to our very own Claudine Tracy, who is our group head of strategy, to respond to these questions from Al and David combined. Claudine, over to you.
Thanks so much, Kerry. Okay, I like Mr. Edwards' question. You're a possibility thinker, Mr. Edwards. So as you would have seen and heard from Patrick, our CFO, and as well as Keith, around how well our diversification strategy has worked for us. And Juan Melo just spoke, and we have seen how the DR's contribution to our profitability has expanded year over year, with a particularly good performance last year. So all that to say, yes, our Caribbean expansion, our Caribbean diversification has worked very well for us. And while not a part of our medium-term strategy, JMMB will go wherever it is that is strategic for us, that will offer our clients value in terms of expanding our integrated financial services offering to them, as well as contributing to shareholder value. So if that takes us to the UK or wherever it takes us, we are definitely open to exploring all opportunities to add value. In terms of David Rose's questions around the specific acquisitions that we have spoken about in our pipeline, it's important to understand that the acquisition process really has several stages. One of the latter stages, and a very important stage, is the regulatory approval stage. And as a multi-jurisdictional group that wants to expand the countries that we operate in, that regulatory process takes time. And so we still have those two transactions in our pipeline. We still remain very, very excited around them. And we continue to have an active M&A acquisition and an active M&A portfolio. And stay tuned.
All right. All right. Good stuff. Sounds like lots of exciting things to come, as always, with JMMB. Now, here's another, I call it super question, because that's what happens when you have great people on your live stream who are thinking alike. And as the saying goes, great minds think alike. So this super question, I'm going to merge it together, because collectively these two questions speak to our digital and technology approach. And I'm going to invite our very own Patricia Duncan Sutherland, who is our group COO, to respond. So here they are, and they're coming from collectively Shamil Scott. Hi Shamil, thank you for joining us. Shamil from Loop News. And also another question from David similarly asked. So Shamil's question speaks to is really asking, are there any immediate plans to enable JMMB customers to participate in the central bank digital currency rollout? That's one question. And then I would say part B to that is, Trisha, if you could speak to JMMB's mobile app, a status update there, perhaps, I believe is what David is asking. And he's also asking a clarifying question about what happened in mid-March when the system seemed to have gone offline. I'm not sure if that's exactly what happened, but I'm going to ask Trisha to respond to these questions. Trisha, welcome. Over to you.
Thank you very much, Carrie, and very happy to be here at this investor briefing. As Keith had spoken to our digital roadmap, in the second time he spoke, I think he spoke to it, we have an intention that within 2 years, all of our clients will be able to have a full digital experience if they so desire. And the way that we are doing it is that our clients will be able to move between our digital and physical channels as they need to or as they desire to. So we want to do it so that we are always in the client's world. So in that context, this year is a very busy year for us with rolling out our digital capabilities, which includes digital onboarding, our mobile app, and our upgraded online internet banking. And so within this year, soon and very soon, David, you can look forward to our JMMB app. We are working very hard. Keith had mentioned that it is currently in testing. So we are looking forward to good things this year and exciting times this year with our clients online, right? And we are also looking at the central bank digital currency. We have not yet identified exactly how we will incorporate this into our digital offering for our clients, but we are actively working on what the opportunities are here with our fintech partners at this time. So as soon as we are clear how we are going to enter in that space, we will be communicating with you and we will be engaging with you as our client. I'm sure that you're our client, right? Shamil Scott, I am pretty sure. All right. And then with respect to the outage we had in March, what we know is that we outsourced part of our disaster recovery to a Tier 3 facility in Jamaica. That Tier 3 facility's cooling system went down. We were very disappointed, but we are in continuous conversations with them, our vendors, and some corrective actions have been taken, and a further audit is being done for other opportunities for improvement with them for their facilities. With that, however, we also expanded our own disaster recovery capabilities so that we become less reliant on them as a third party. So that's where we're at with that, looking forward to a full digital experience with our clients and looking forward to serve you any way you want to be served.
Thank you very much, Trisha. I appreciate your participation as well. And thanks again to Shamil and David for your questions. So we're just past time, the top of the hour, but I really want us to squeeze in one final question here from Stephen. Again, going back to Stephen Jackson. Stephen's question is, really, why is JMMB's stock trading below its intrinsic value using a conservative PE multiple of 10 times? What is the market trying to tell JMMB is Stephen's question. And I'm going to invite our group CEO to propose a response for Stephen. Thank you very much, Sir Keith. Over to you.
Stephen, thank you very much for the question. And I believe one of the reasons that we're even doing an investor briefing is to keep the market engaged, keep the informed analysts like yourself and journalists engaged around JMMB strategies, because information, we believe, is important to guide investment decisions. No, JMMB's stock is widely held, and it's widely held both in Jamaica and Trinidad. And what we have seen is that there are a couple of things that happen with the stock, which I will mention too. One is that when it's widely held and it's held by a significant body of retail clients, on low trading volumes, or when the market is fairly liquid, that can depress the stock price because it's widely held. Secondly, the cross-border trading between Jamaica and Trinidad. What we see is, and we have seen this with cross-listed companies, where the stock is bought in Trinidad and then it's sold in Jamaica, in order to acquire foreign exchange to bring back into the market, because Trinidad does have challenges on the FX side in terms of meeting the supply or the demand for FX in Trinidad. So these are areas that we pay special attention to, and this is one of the reasons why we announced our buyback program last year, because if the JMMB is trading below its fundamentals, and it trades below technical levels, JMMB needs to be in a position to be able to act on the buyback program when required, and to support the effort. Now, there's also the market itself right now. There's a ton load of uncertainty around where are these markets going with the high interest rates, etc. Now, this is, that would be a contributing factor. But what we are clear on is that we must do what we need to do to keep the market fully informed. I am believing that when we produce results like we have just done, that the market should see that JMMB is a good, even medium-term, long-term prospect investment as an investment, and we continue to pay reasonable dividends. Our dividend policy is 15 to 30% of earnings, and so therefore we believe that we agree that we are trading below, and that we must do what we must do in terms of our buyback program, and also in terms of keeping the market fully informed around our strategic path, and on demonstrating our diversification, as we just demonstrated. When one market is up or one country is up, another may be down. And then when one country is down, another may be up. When a business line is doing well, another may not be doing as well. When you have diversification as we go forward, in terms of the whole digital space, the payment space, that we're creating new revenue streams. And JMMB is a sustainable stock that will over time deliver the value and the capital appreciation, but we have to keep at it.
Thank you, Keith. Thank you very much for that response. And I know I said that was the last question, but I got one other question here, and I want to squeeze in because actually it could be an opportunity for us to share something great by way of great news. And I'm going to invite Trisha Sutherland to come back. Shamil Scott's question for Trisha again. I said, well, she's referring to the fact that Trisha would have said that JMMB will provide a choice to our customers in relation to digital and physical branches. Trisha, can you speak to the plans that we have so far to set up more physical branches across the island? We'd love you to speak to that to answer Shamil's question, and then we'll wrap. Thank you, Trisha. Back over to you.
Okay. Yes, Shamil. And to all of our listeners and participants here today. So, where we come from in JMMB, everything we do is coming through the client's viewpoint, living in the client's world. So where we put a branch is going to be in response to where we see that the client has a need for that physical space. And so, yes, we will be expanding our brick and mortar, but we're going to do it smartly and with our clients at the center of that decision. So right now in Jamaica, we are currently in the process of erecting a branch in Ligani. In DR, we are also expanding, and in Trinidad, we are also expanding. putting in another branch. So we will, but it's not going to be an aggressive rollout of brick and mortar. It's going to be a smart rollout with our clients in mind and in partnership with our clients. So it is where it is needed and where our clients will be best served.
Thank you very much, Tricia. And thanks again to everyone who asked the question. Again, we could not get to all the wonderful questions, but we are, as always, committed to giving you the responses directly via email, offline, at the conclusion of this broadcast. So thank you again. And thank you again to everyone who joined and participated in this live stream. We really appreciate the opportunity to share with you all of the exciting things that came out of the 2021 to 2022 financial year. Again, it's part of our commitment to deliver these quarterly briefings to you to give you deeper insights and understanding into what we are doing as an organization and our plans for the future. And of course, we also want to thank all of the participants who would have answered questions, our technical team here, our marketing and office of strategy management teams who continue to work tirelessly to bring this together behind the scenes. And of course, we continue to wish everyone, wherever you are, good health, abundance, and God's willing, we'll see you all again soon. Thank you very much for joining. Have a good rest of the day.